Counterintuitive fact, Rocket Lab just grabbed a $266 million US Space Force contract, and the market still treats RKLB like a meme proxy. That mismatch is the trade. Second nine-figure defense win this year. May, $190 million HASTE award from Endural. Now, $266 million from Space Systems Command. Two customers, two checks, same stock, still trading like it has nothing behind it. Welcome back to Launch Money TV. Tight, simple, and grounded. Nothing in this video is financial advice, educational and entertainment only. I can be wrong. Today, the Space Force Award, why it matters for backlog quality over headlines, where Neutron stands, and how to trade the next 30 to 90 days. We're also covering ASTS and August, and why SPCX drives this whole sector. Quick prices for context. RKLB, $69.12 pre-market. Market cap roughly $40.0 billion. Down from a 2026 high near $124.70, still off 45% even after this contract. ASTS, $63.34 pre-market. Market cap roughly $25.8 billion. Held up better than almost anything else in the sector. SPCX, SpaceX public ticker proxy, about $125, down from a post-IPO peak of $225. That number drives everything else here. 3 tickers, 1 capital flow story. Let's get into it. Here's what happened. Rocket Lab won a $266 million firm fixed price contract out of U.S. Space Force Space Systems Command for suborbital launch services. It includes 12 confirmed launches with options for 6 more, running out of Pacific Spaceport Complex, Alaska through 2028. That's not a cool headline. That's a quality of demand upgrade. Numbers first. Rocket Lab's 2026 revenue guidance sits at $580 to $620 million. This $266 million contract spread through 2028 isn't a one-quarter pop. It's multi-year backlog, stacked on the $816 million SDA contract and the $190 million HASTE award. This company is stacking government contracts like bricks. The market's been punishing RKLB for the wrong reason. Since the SpaceX IPO priced at $135, ran to $225, and settled near $125, capital didn't just rotate, it got vacuumed. Money that used to chase SpaceX proxies moved into SPCX itself. That's why you saw 30 to 55% drawdowns across space small caps. Satellogic down 55.9%, Rocket Lab down 38.5% at the worst, shedding roughly $28 billion in market cap. 19 of 26 tracked space companies fell after May 15th. Sector market cap dropped from $224 billion to $155 billion, $69 billion that moved into one ticker. The key insight, this was a capital flow correction, not a thesis collapse. Compare that to Iridium, up 16.7% the same window because its revenue is contracted and government heavy. Quality survives rotation, story stocks get liquidated first. So what does the Space Force win do? It doesn't fix execution risk, but it changes one thing the market respects: durability. When your customer is a government program office, purchase intent is real, backlog has teeth, and Wall Street re-rates companies when backlog isn't just commercial hope. Now, I'll say something that'll make some people mad. A $266 million award isn't huge versus what bulls already believe Rocket Lab can become, but it's huge versus what bears think Rocket Lab is today. Bears think RKLB is a story stock. This contract is a receipt. Let's put the space side on the board because you need to know what you're buying. Suborbital launch services isn't the same as orbital payload delivery. Orbital means stable orbit, Electron's job, eventually Neutron's. Suborbital means up, job done, back down without reaching orbit.
For defense customers, that's speed and testing that doesn't wait for perfect. That's exactly what HASTE is. Hypersonic Accelerator Suborbital Test Electron, a modified Electron for hypersonic weapons testing out of Launch Complex 2 in Virginia. Endural paid $190 million for 3 flights. Now Space Systems Command pays $266 million for 12 more out of Alaska. Options for 6 additional. Same capability, a small, fast, reliable rocket the Pentagon can call on repeatedly. The contract runs through 2028. That matters because it anchors demand across multiple budget cycles. Defense budgets get fought over every year in Congress. Surviving multiple appropriations fights is durability you can underwrite. This fits the broader pattern. Defense and government demand is the backbone of modern space, not vibes. Now Neutron, the real long-term valuation driver. It's Rocket Lab's medium-lift rocket, meant to compete for bigger national security launches Electron can't touch. It targets a maiden flight in Q4 2026. Not flown yet, not revenue yet. That's the single biggest swing factor in the bull case. Every delay pushes out the timeline against SpaceX's Falcon 9 and Falcon Heavy. For contrast, look at SpaceX's cadence. Recently, a last-second launch aboard, then a successful launch the very next day. That's the moat in 2 sentences. Reliability plus cadence. Scrub, diagnose overnight, fly again within 24 hours. That's the standard Rocket Lab is chasing with Neutron. Rocket Lab is playing a different game today. Small and responsive with Electron and HASTE. Government customers who value reliability over spectacle. The longer-term wildcard is still Neutron. Until it flies successfully, Rocket Lab is a small launch and space systems company with a promising roadmap. Once it flies, the valuation conversation changes. Now, the money question. What changes for the trade? First, this contract is a sentiment reset catalyst, not a full revaluation. Second, it reinforces the re-entry thesis. The business trajectory didn't change nearly as much as the stock did. RKLB fell from $124.70 to under $70, a 44% drawdown, while backlog quality kept improving the whole time. So here's how I'd frame it. If you want clean exposure, buy shares and size it like it can hurt you, because it can. Bull case, government demand plus sector normalization lifts the multiple, Neutron's Q4 window a second catalyst on top. Bear case, execution and dilution risk. Cash calls happen when sentiment is weakest. If you want to find risk, focus on time. A simple structure is a call spread 60 to 120 days out. With RKLB near $69, buy the $75 calls, sell the $90 calls. Same expiry. You pay for the move between here and there, cap your cost, cap your upside at a level that still captures a real re-rate. Another approach? Sell puts at a level you'd want to own shares. If RKLB pulls back toward $55 to $60 on broad weakness, not bad company news, selling puts there at 30 to 45 days gets you paid to wait. Assigned? Fine, discount entry. Not assigned, you kept the premium. Not advice, just the playbook. This is the part most people miss. SPCX is a gravity well. When SPCX stabilizes, small caps breathe. When SPCX dumps, small caps suffocate. Watch SPCX as your leading indicator, not RKLB. It went from $135 at IPO to $225 at the peak to roughly $125 now.
Every leg down in SPCX drags small cap space names with it, even ones with good news that week. Before you size up RKLB or ASTS, check where SPCX sits relative to its recent range. Basing or bouncing off support is your green light. A new low means don't fight the tape. So you don't only watch RKLB, you watch the sector's center of mass. If SPCX holds and risk appetite returns, RKLB can get a second wave. If SPCX rolls over, RKLB can still win contracts and the stock can still go nowhere. That's the truth. ASTS is the other side of the space trade. Sector average drawdown, 31%. ASTS, only about 19.2%. The market already prices ASTS closer to execution story with real telecom partners than speculative launch proxy. ASTS has a launch window for Bluebird Block 2 satellites in early August, targeting 45 to 60 satellites in orbit by year-end. If those deploy cleanly, perception shifts fast. ASTS already has real backing, a 10-year $175 million prepayment from STC in Saudi Arabia, a roughly $100 million deal with Verizon, a Vodafone Idea partnership in India, and a Rakuten joint venture in Japan. A clean August launch turns those partnerships from taper into proof, and money rotates into execution winners. So even if you're not trading ASTS, watch it. It tells you what the market will pay for progress right now. Let's end with risk, and let's be specific instead of vague. Contracts do not equal flawless delivery. Hardware fails. Schedules slip. If Neutron's Q4 2026 target slips into 2027, common for new rockets, that delay could hit the stock harder than this backlog offset's short turn. Space is expensive. Even good companies raise money at bad times. Rocket Lab and ASTS both burn real cash. A secondary priced into a weak tape can erase a quarter's worth of good news overnight. RKLB can do everything right and still trade like a proxy when the sector de-risks. Another leg down in SPCX toward its $135 IPO print, and RKLB and ASTS get dragged down too, contract wins or not. Rates, liquidity, risk on versus risk off. The stock market doesn't care about your mission patch. A hawkish Fed surprise flattens this trade regardless of what Space Systems Command just signed. Here's the wrap. A $266 million Space Force award is a signal. It pushes Rocket Lab further into real contractor territory, stacking on the $816 million SDA contract and the $190 million HASTE award already on the books. That's the direction you want.
cleanest takeaway, watch RKLB around this catalyst, watch Neutron's Q4 timeline, watch ASTS in August, and watch SPCX above all of it. But trade it with a plan. Defined risk, defined time. If you want more of these episodes, space news, real investing implications, subscribe. Drop a comment. Are you trading RKLB, ASTS, or just hiding in SPCX? Final disclaimer, nothing here is financial advice. Do your own research. I'm not your advisor. Photo credits for this channel, NASA Public Domain, Wikimedia Commons.